think we're going to go ahead and get started. Before we actually go into the toolkit, I wanted to take a quick moment and go over three very helpful documents that you may want to click on and then download and have at your disposal if you didn't already see some of these in the email that came across yesterday. The first is a PDF guide that is very descriptive on how to use the toolkit to specifically address the requirements under 408b2. It's going to serve as kind of the foundation for our demonstration today, and also would be very helpful to you getting acclimated in the toolkit once it's released on Thursday night. The data worksheet is an Excel file and essentially represents the data structure that is applicable when entering information into the toolkit. So I'll just take one quick second and show you this, and then I'll go back to the screen so you can go ahead and click to download the file. Now with this file set up, if you look across the bottom here, you'll see a bunch of green and orange tabs. All of the green tabs are what we typically call settings areas, and you'll see those in the toolkit today. So if we looked at service providers, for example, you're going to see all the distinct columns such as service provider name, arrangement with client, contact name, email address. Basically all of the options that you can put into the toolkit, whether they're text-based or some things like arrangement with client, might have multiple options such as a drop-down that you would actually select from. So this essentially lays out the data that we need to generate the report, and would be ideal for you to, maybe if you want to get started right away, since the toolkit application is not going to be there until Thursday night, you'd be able to simply use this file to start to pre-populate that data, or at least record it, and then it'll make actually entering in the toolkit a lot easier. The tabs in orange are client-specific sections that you'll see. So one example would be client-level expenses. And this is where you can simply tie any compensation that you create to a particular client. The operational would let you define all the revenue sharing sections. So these will make more sense as I go through the actual toolkit. But I wanted to point out that this file was there and to make sure that you were able to download it if you want to. The third is just another link to our report samples. But we'll be going through those a little bit later, and that was also linked in the email that was sent out yesterday. All right, we're going to go ahead and get started. So let me close the PowerPoint here. And let's go ahead and actually jump into the toolkit application. So the first thing we want to talk about, and especially as relate back to the kind of the third page of that document, if you happen to grab it or look at it already, the 408b2 list of here's the things that you need to include in your disclosure. The first thing is essentially to provide a description of the services that you, an affiliate or subcontractor, will provide to the plan. So what you're going to start with is by going under settings and expense settings. Let's take a look at some of these options. The first tab is going to be service providers. So this is essentially is a description of an entity. So you see three here from my example: Custodian XYZ, MDC Advisors, and MDC TPA. This could contain, it's basically the name of your firm, any contact name, basic other descriptions like phone, email, address. And if I click to create a service provider here, you're going to see a few more options. You're going to see if you have a direct agreement with the plan. You're going to indicate if you want to actually include this on your 408b2 disclosure. And this is an important point to make because you may put in a service provider for, let's say, for Schwab as an example, because they are a service provider to the plan, and you want to include them in your fee and expense summary so that you can show the plan not only your expenses but other expenses for non-related service providers. So it does make sense in those cases to put in other entities outside of yourself. But obviously you don't want their expenses to come into your 408b2 disclosure, so that's where this checkbox comes into play, where you would only select essentially the entity that is you for this particular checkbox, and every other entity you put in the system would not have that selected. Most of the rest of the stuff on here is pretty self-explanatory. The last thing to mention is the client arrangement. So if you do have an affiliate or there's a subcontractor, Matrix as a custodian is a great example where they're actually serving as a custodian as a subcontractor for a TPA or record keeper. So you'd be able to put in Matrix, link them as a subcontractor, and the fees that Matrix receives will come through onto your 4AP2 disclosure. Second tab is service provider types. So you can think about this just as essentially as a kind of a generic way to refer to a role in the plan, right? So you see some basic ones here are going to be pre-populated for you: accountant, actuary, custodian, record keeper, RIA. Pretty self-explanatory. But these are editable. So let's take RIA for example. You'll see most of our service providers, services, and compensation sections that you'll see in a second all have these type codes. And these essentially are kind of fi360 codes that allow us to tie different user data together under one kind of common name. So our common name here is going to be RIA. But let's say you want to refer to it as advisor or fiduciary advisor or whatever you want to call it. You can provide your own name. This is what will appear in all of your reports, but you're still going to be linked back to the central kind of RIA code so that it allows us to, in the future, possibly get to more benchmarking or other related activities that require that type of centralization and grouping of data. If you're serving as an advisor, one of the requirements under the Act is to include your legal registration, whether you're registered as an advisor under the Advisors Act of 40 or under state code. If you pick state code, you'll have to pick your state. Pretty basic. You can provide a description of your firm here. There's some default text always provided, but you can obviously change this as you will. The last section to cover right now is services. So you could think about these as the services that you are performing for the plan. So you'll see a bunch of them are going to be pre-populated for you, just like my screen that you see here today. Any of these, again, can be altered or changed. You can create new services as you need to. Let's just take an example here. Let's say we want to edit the investment advice plan level service. If you go into here, again, you're going to see a service code for us to link things back together. So we're going to want to leave that at plan level. But let's say you want to change your service name so that it directly matches whatever you have in your agreement. So let's say you call it plan advice. And you may have your own description on what that service means or what you're doing for the plan. And a key indication is fiduciary status. Again, we're going to default what we believe should be the fiduciary status for this particular type of service. You can change this if you absolutely must from fiduciary to non-fiduciary or vice versa. One of the important requirements, obviously, under the Act is to indicate your fiduciary status in the execution of your services. So this is actually done on a service-by-service basis, and you'll see how the report will group your services based on here are the fiduciary services being performed by whatever the entity is, and here are the non-fiduciary services being performed by that same entity. Okay, so just to take a quick little break here, what we've basically gone through is the ability to set up entities or service providers, assign certain service provider types, and establish the services that we're performing. So that really fits into that first requirement under 4AP2, along with the second one to identify if your status as an RIA under your regulatory obligations. The third section requires you to define the compensation that you will receive directly from the plan, the participant, any direct compensation. So let's go ahead and jump to this section, and we'll skip over fee schedules for a minute. If you're an existing user, whenever you first come into this area, you're probably going to see some existing data. If you're a brand new user or you never used our fee and expense area, then this page may be empty. If you were an existing user, we're going to migrate all of your expense data that you built in the old toolkit into the new one. What you're going to see is we'll try and combine or centralize the fees, because if you're familiar with the old system, everything was client-specific and even time period-specific. So if you added an expense for a particular client in March, you would have had to create the same expense to add it in June. So there was no centralization of data. Now that's all changed, as you can probably tell, because we're still in user settings here. This is all centralized. So to the extent that you use the same fees, the same services, the same service providers, you're establishing these centrally, and you'll be able to link them in to clients whenever we go into that section. So it definitely provides a lot of efficiency, again, especially for those individuals that have much more centralized definitions of how they charge and provide for services. If you do have exceptions, you definitely still can account for those. It just is set up to allow for that. So back to the compensation. I got a little tangent there. What you're going to see here just is an example of a fee that was migrated from the old system. If you look at the ones I'm checking, they're all advisory fees, and you see how they all have a name after them, from Dogs Donuts, from 4th Avenue, from Getting Started. This is telling you that this fee was created, and it was based on a record that you had put in for that particular client. And the reason it created 6 different ones here is because I had different definitions for the same fee. So I had 6 advisory fees in the old system, and they were all built differently. So you can see here some of them were percentage of assets, some of them were flat fee, some of them had different values associated with them. So to the extent that you had unique information, we obviously weren't able to centralize it into one record. So we actually had to create duplicates, and that's why we attached the client name to the end of it, so just to help you identify where it came from. But let's say this example here, let's say your advisory fee is actually using a fee schedule. And the reason you had to build multiple ones in the system before is because there was no fee schedule, so you had to put maybe one client it was 10 basis points, maybe one client it was 8, one client it was 6, and you had to do that for each one. Now what you're going to want to do for that is actually define a fee schedule and link that instead, so you can still rely on one expense or one compensation profile, link it to a fee schedule so it'll automatically determine the fee based on the schedule and the client variable that you choose. So let's go ahead and take a quick look at that before we get any further with compensation. Again, if you do have questions, please submit them via the GoToMeeting panel, and I'll adjust them later in the presentation. Okay, so on the fee schedules, let's go ahead and create a new fee schedule, and let's just call it our advisory fee. This could be a record-keeping fee, it could be whatever you want, and you can create as many fee schedules as you want to, and you'll see how that all links together in a minute or two. The data driver, let's go ahead and pick total assets for this case. So this basically says, based on assets in the plan or assets in my client, I'm going to define the ranges. So 1 to $1 million, 1 million to 2 million, 3 million to 4 million, and so on. Frequency, how often is the fee charged? Let's say this is a quarterly fee. And then how's it assessed? Is it a basis point value, percentage of assets, or is it a flat fee? And we have 2 different types of fee schedules, flat and tiered. It's a little easier to see an example than it is to explain this, but basically a flat schedule is just going to essentially say, your plan assets fall between 1 and 2 million, so we're going to charge you this fee. Whereas a tiered schedule would say, your plan assets fall between 1 million and 2 million, and let's say there was another tier of 500,000 to $1 million. Beneath that, it's actually going to sum the values for the tier that falls in, plus any tiers underneath of it. So that might be more common for like a record keeping or a participant fee, where it might be, charge $8 for the first 100 participants, then $6 for the next 250, then $5 for the next 1,000, and it would sum those all together. So you have the flexibility to build the schedule as you need it. I think for the advisory fee, in most cases, we're going to be looking at a flat schedule. You can put in a minimum and maximum fee. So let's say, maybe the plan's real small, and if you just use the formula we have here, maybe the minimum fee is less than $2,500. So you want to ensure that your minimum fee is going to be $2,500 or greater. That's going to allow you to get that. And then the maximum fee is the exact opposite, right? So the plan's huge. It's got tens of millions of dollars in it, and you want to have a cap on your potential fee so it doesn't go over that. You could put a cap. Let's say the cap is $10,000. These are optional components. Go ahead and create the fee schedule. And now we need to edit the range. So this is going to define based on the minimum to maximum assets. Let's just say 1 to a million. We're going to charge this 12.5 basis points. Let's just go ahead and actually keep this simple at 10. Add another row, let's say from 1 million to 2 million. We're going to charge 8. 2 million to 3 million. Going to charge 7. So that's pretty simple. As you can see, you can continue adding as many tiers as are applicable, and you can go ahead and save it whenever you're done. I'll show you how this actually comes into play on the report side a little later. But let's go ahead and jump back to compensation. And let's say we want to take these 5 advisory fees and we want to combine them into a new one. So what I'm actually going to do is I'm just going to delete all of these because I don't really need them anymore. And just for an example, I'll go ahead and create a new compensation profile. So let's go ahead and say this is our advisory fee, and our compensation code here is just going to be kind of general investment advisory services under 321 ERISA, so we're not taking any discretion. And let's just call it our standard advisory fee. This name here is for internal use, so the client won't see this. The client will see what's the display name, so maybe that we just call advisory fee. And what we'll choose for, instead of defining it like normal basis point flat fee per participant, what we'll go ahead and do is actually pick fee schedule. And then we'll go ahead and choose the advisory fee schedule. You can define the compensation, so you can explain what this is for, how it's anything you want to describe that needs to be in there. And then you can link the services that you're performing underneath of this. So if you remember, these are the services that I already showed you and we created, right? So let's say under this kind of bundled advisory fee, we're going to provide 404C compliance. We're going to have committee meetings. We're going to develop their IPS. We'll do the enrollment meetings. We'll provide fee analysis. We'll provide plan-level investment advice. Monitor their investment options. And let's say we'll help them with service provider selection and monitoring. So you can pick as many or none of those services. Obviously, one of the requirements in the regulation is to state for this compensation, here are the services you're performing. So you should select services underneath at least one, but it is an optional field. Lastly, you need to identify who's paying the fee and who's receiving the fee. So payer and payee. So payer in this case, since this is our advisory fee here, let's say this is taken straight from plan assets. If you wanted to pay it from company assets, you could. If you wanted to pay it from an ERISA budget account, you could. If you wanted to pay it from any of the other service provider types, they'll be listed here also. So let's say this is from plan or client assets, and the payee is the RIA. We can go ahead and create profile. And you're going to see it come through. So at this point, what I'm going to go ahead and do is actually go into a client and show you how these things now link together under one particular entity. So let's go up to my clients. And just for an example here, we have a client called Great 4AP2 Example. We'll go ahead and link into that. And I'm going to go to the Basic Information tab first. This third-party detail section is going to be changed from what it used to be. What you're going to see listed here is service provider type and service provider. So if you remember in the old system, it just had 3 or 4 text boxes for accountant, attorney, admin. There really wasn't much there. Now this is based off of the integration with service providers and service provider types. So if we edit this for a particular client, you're going to have the ability to pick from any of your service provider types that you have. And let's say if we wanted to add an actuary onto this plan, we could. And you can assign it to a specific service provider, but we don't have one created for our actuary, so we could leave this as not assigned. But the idea is enter all of the service providers that are providing services to the plan. So if you want to be real simple and just produce your 4AP2 report and you don't care about showing the plan everyone else, then all you need to add is you. If you want to show the client or the fee and expense report, which has kind of the complete plan summary of all the providers, then you're going to want to enter everyone into this section, at least the service provider types. Again, the service provider name is not necessarily required. So you can see here we have our TPA is MDC TPA, our custodian is XYZ, and our IA is MDC advisors. Now let's go ahead and actually take a look at a client portfolio. So let's go ahead and edit the May 31st time period. Since we're on monthly data here, if you didn't have monthly data, it would be still March 31st at this point. Once you're inside the client, what we're going to go to is the Expenses tab. Let me actually first show you holdings real quick. Nothing's changed in here, but just to show you, this particular plan has 16 holdings, and it's got $89,000 in assets. So an extremely small plan in this example. But let's go ahead and go into Expenses. And let's take a look at first compensation profiles. So this is what we used to call client level fees, if you're familiar with the old system. When you go into this page, this client already has some data loaded, so you're going to see this table populated. If you're in a new client, it's going to be empty. And essentially all you're doing inside a client is linking an established compensation record to this particular client. So once you have the compensation record set up, you don't have to define that over and over and over again. All you have to do is simply come into this area, say add or link compensation profile. It'll interface you with all the profiles you've established on your account, such as the one we just created, right, was standard advisory fee. So if we check that, click link selected, it's not going to show up in this table. So you'll see here our name, standard advisory fee, our display name is advisory fee. It's linked to our fee schedule, and the calculated value is $2,500. So if you remember, we had defined the fee schedule, but we also put in a minimum value. So what's actually happening, because this plan's so small, our advisory fee normally would be too low, so it's assigning the minimum $2,500 instead. You can see here the payers, planner client assets. You can see here for some other expenses that have already been added to this client. You can see here the company is paying for plan and account valuation. The company is paying for, obviously, termination expense. If you had any, that needs to be obviously stated in the 4AP2 disclosure. One of the requirements is to put any termination expense. So those are simply what we call one-time fees. So if we take a look at one of those as an example here, you can edit these directly from inside the client, so you don't have to go back to your settings area to edit these. but it is important to note these are centralized. So if you change it in here, it's going to change it for any other client that has this link to it. So it's just important to note that. But for the compensation for termination, what you're going to do usually here is for frequency, you're going to put one time. So instead of doing a yearly or ongoing expense, you're going to select one time from the frequency dropdown. Another kind of unique example for this case, and this is a more complex case. So I'm sure many of you in the call today are simply an RIA, and that's all you're going to include on your disclosure. But in some other cases, some of our users have an RIA firm, a TPA firm that are affiliated and need to show both or want to show both of those compensation on one 4PT report. So what you're seeing here is that example where you have the RIA, a TPA, and a custodian that all need to be on one 4AP2 disclosure. So definitely the more kind of complex example, but hopefully you can, if you just remove some of the data, you can think about what it would look like if you're just an RIA. One example here of kind of a related party transaction that you need to identify. You can see here this particular expense, this platform fee, is paid from the TPA directly to the custodian. So all that you do here that's different from everything else we've looked at is the payer and payee. So instead of picking plan or company from the payer, you pick the TPA. And then again, the payee or the recipient is the custodian. So this is then going to show up in the 4AP2 report as compensation paid between related parties. Okay, we're definitely going over a lot of content here. I just want to take a quick break to make sure that everyone's still kind of following along here. We don't have any questions. We actually look pretty good, so hopefully that means I'm doing a pretty good job, not putting you to sleep. All right, so now that we have our direct expenses identified along with any transactions between related parties, you also could put an indirect compensation into this page. And again, there's really no difference between that either, except for the fact that whenever you're editing the expense, you would select the appropriate payer. So let's say the fund manager is giving you some compensation as an RIA for directing business their way. You could indicate the fee, state it just like we did before, how it's described, and simply by choosing the payer, the fund manager, and the payee as whoever it might be, it will show up in the 4AP2 disclosure as indirect compensation received by whoever you select as the payer. So that allows you to define direct compensation, indirect compensation, and compensation between related parties simply by just customizing the payer and payee options. Just a quick note, you can create new compensation profiles from this page. So again, instead of having to go always back up into settings, you can create a new one directly from here. And if you do, it actually automatically assigns it into that client. So just a nice little efficiency thing there for you. And again, once you do that, just a reminder, it will be available for any other client to be able to link to. The last little note, just to make sure you understand, if you were to go in and say, I'm going to delete this standard advisory fee, and you click remove, all you're doing is unlinking it from this client. You're not actually deleting the fee that you built. All you're doing is saying, I don't want this fee to be in this client anymore, so I'm going to remove it from the client. But it will still be in the directory. It will still be in any other client that had it referenced. It just won't be in this client. If you wanted to see the services, you could click the view here. It's going to show you the services that you're performing for the fee that you indicated. This copy feature is kind of nice. So to the extent that, let's say, the Form 5500 fee, it's almost always $250. So you created the central fee, and that's almost always what it is. But let's say for some client, you have a unique example that you need to build a distinct fee record, and you don't want to alter the one that's assigned to every other client. What you could do is you could click copy. You could say Form 5500 special. Whatever you want to call it. Click copy. This will now create a new distinct expense record in your compensation section, so it will appear in here. It automatically was assigned to this client, and what we could do now is delete this one because we don't need that link to this client. What we want is the special one, and let's say the special one is $350. So we'll just go ahead and change that and save it. So now, just for this client, we've added this compensation, the amounts unique to them, and we didn't alter any of the other clients that had the original Form 5500 attached. So just a nice little way to add those unique situations if and when they exist. Okay, let's go ahead and go back to the main fee and expense section. Let's take a look at operational fees, because this has changed since or changed with this release. Most of this page looks the same if you're familiar with the old site. One column addition, shareholder service fee. This column was not there before. And this also is deducted from the net expense ratio. So you could think of it like a sales or sub-TA fee, and that we're going to take the net expense ratio, we'll subtract any 12B1 fee, we'll subtract any sub-TA fee, we'll subtract any shareholder service fee, and that's going to be the net fee retained by the investment manager. Wrap fee is still always in addition on top of the expense ratio. So whenever you're defining shareholder service, you can define it as a BIP or dollar per participant, just like you did for sub-TA. So you can see this example here. We have some sales BIPs for 12B1. We have a number of sub-TA charges, and one fund actually pays the shareholder service. This sub-TA is $1 per participant, and the shareholder service is a basis point. Since we did $1 per participant, you need to make sure you put in number of participants. So that's why you see the 9. And if you haven't seen this area in a few months, the blue coloring is important. That tells you that you edited it. So anything that doesn't have a background color means it came from Morningstar or it's our default. And usually we will only default the sales column. That's why you see these 25 in here. If you had to change this for whatever reason, maybe there is no 12B1 fee in your situation or it's different, if you change it, you're going to see it turn blue telling you that you made a custom edit in this section. The other thing you may see in here, and I don't have this example, but if you're using our custom universe functionality to populate revenue sharing data for a platform, so let's take Matrix again. We've had some users that actually have set up Matrix as a custom universe, and they've got an Excel file from Matrix that says, for this investment, here's the 12B1, here's the sub-TA, here's the shareholder service, and they've uploaded that Excel file into the custom universe area. And since if you link a client to a custom universe, what it will do is pre-populate all of these values based on that custom universe record. So in that example I just gave you, that particular user has 30 or 40 clients all linked back to one Matrix universe, and it pre-populates all of these values for them. So they don't have to do it on a client-by-client basis. So definitely an efficiency step that if you aren't using, I recommend that you do that if you can. We don't have time to kind of go through that process, but there are some other tutorials and demos in the Help Center that help with loading and populating the custom universe data. Those will show as yellow, by the way. So what you would see if you went into this page, you're going to see the yellow background on these fields instead of blue. You can always still overwrite on a client basis, so you could still go into a yellow box and type in a value, and it'll turn blue and save, and that will always overwrite. But it definitely is a great way to pre-populate the information. The only other thing I want to show you on this page is the change who's being paid on the right. So there's a few new things here. One is the payee. So what you'll see on the right is the same payee drop-down you saw when we were defining compensation. So this will link back to all of your available service provider types and will include company assets, the rest of budget account, and plan or client assets. So in a lot of cases, you're going to have the 12B1 sales fee. Maybe it's initially directed to the RIA. And by default, it's going to say keep compensation. So to the extent you are receiving revenue sharing and you're keeping it, you'll need to indicate the services that you're providing for that compensation. So this is the same link to the services section. So you can define for this 12B1 sales revenue, here is the services that I'm performing. So this might be more typical for a broker or someone that's actually keeping the revenue sharing. If you're offsetting the revenue sharing, or you're doing something, or depositing it back to the plan, or you have an ERISA budget account, you're going to want to change this payment arrangement. And you're going to want to pick one of the options that you see below here. Offset my fees. It's a little hard to read the rest of that drop down here. But basically, that's balance to plan, offset my fees, and balance kept on account at the provider. Deposit directly to plan, so any revenue sharing just automatically flows right back to the plan. Or deposit to an ERISA budget account, which could then be used to pay other compensation for any other service provider. So for our example here, let's just say offset my fees, balance to plan. And the way this works in the report is what you see in one of our examples is that it's going to say the RIA collected $2,000 in revenue sharing. And it then offset that $2,000 or subtracted it from any other fees that it charged. And that either leaves you with a net balance that still needs to be paid, or it leaves you with a credit that actually could be deposited back into plan assets. So definitely an important selection and identification over here on the right to ensure that the revenue sharing is properly accounted for. We'll look at the shareholder page, and then I'll see if we have any questions. The shareholder page primarily did not change at all from the previous release. So again, this shareholder fees page lets you put in any fees charged on the purchaser redemption or sale of investments, loads, finder's fees, redemption fees. And again, on the right-hand side, you have the same information on the operational. So who's receiving the fee? Are they offsetting it? Are they keeping it? You can indicate the appropriate response. Okay, let's see if we have any questions here to address. So bear with me for 1 second here. Okay, I'll address one or two quick questions here before we move on. So really what's next is to actually take a look at the report. So one was on basically if you're working with a prospect, is there a fact finder available to assist in gathering data from prospects? So the best recommendation would be to take that Excel file that I showed you earlier and use that to help decide on what information do you need to get in order to correctly populate it. And that obviously is not so much going to be for the 4B2 disclosure, because it's their prospect. Obviously, you don't need to give it to them unless you're actually doing the trying to actually execute the sale, the transition. And in that case, we might want to consider adding something that's a little bit more specific to that scenario to make it a little bit more streamlined, because the Excel file is ideal for you as the firm to put in all of your options, whereas I think you're kind of asking for something that's more client-specific. So that's definitely a great question, and we'll see if we can put something together here to help with that in the future. One question on timing. Obviously, it's pretty close to the deadline here, and you still can't put data into the toolkit. And obviously, we realize that. It's been an extreme amount of effort here on our side to get where we're at today. and to get it out on Thursday night. So, we do apologize with such closeness to the July 1st deadline. In terms of what you can do, what I would recommend, again, is using that Excel file that I referenced earlier. Try and start putting the data into that system, into that Excel file, so that you always have the organized on, here are my different compensation systems, here's how they're built, here are the descriptions I want to use, here are the services I'm performing, because that's going to help make entry into the toolkit a lot easier. It'll be more copy-paste than actually trying to, figure it out as you're typing into the toolkit. So that, and reviewing that Word document file that describes how to use the interface, both of those I think will make it easier for you to quickly generate these once it's available on Friday morning. Just in terms of, just to clarify, we are putting this functionality out on this Thursday evening, so it will be available approximately 11 o'clock p.m. Eastern Time on Thursday night. There will be an additional fee to get access to the disclosure report itself. So if you have the Platinum Toolkit, for example, right now, you'll have access to all of the area to define and build that we've seen today. The only difference you're going to that you will see is that if you go into the Reports tab, there's going to be a report for 404A5 and a report for 4AP2, and these would not be available unless you pay the upgrade fee, which is $300 annually. No plan fees, no anything, just $300 annually, and you can get access to both of those report sections. So if you didn't upgrade, you wouldn't be able to actually produce the report. Okay, I think that's all I'm going to go ahead and address right now. The last question was on the Excel spreadsheet, just because I've mentioned it a few times. Let me bring back up this PowerPoint slide. And if you could just click the link on this PowerPoint slide right now, and that should take you to the worksheet. So I'll just wait here for a few seconds for anyone that wants to go ahead and click that link and download the file. It will be available in the toolkit, but it's not going to be there until Thursday night, so that wouldn't help you too much. If you can't get the link to work for whatever reason, just go ahead and email tools@fi360.com and just ask for it, and we can send it to you. Okay. So to kind of move on and quickly show you where the reports are at and how they look. As you see here, there will be two report templates, one for 404, one for 4AP2. You can build custom templates just like before, so if you want to build your own color scheme, change it from landscape to portrait, do anything else related to custom templates that you already do today. You'll see them if you go into Edit Details. You're going to see two new sections, 404A and 4AP2. And again, if you didn't have access, if you didn't pay the upgrade fee, these will be grayed out. But once you do, you'll be able to select and add these into any report template. So the only thing to note for those is there are some other required pieces. So, they require a glossary. They require, some of them are good with the cover page. The 4AP2 one requires the operational fee summary. So in the guide, we tell you that if you're going to build your own template, make sure you pick these sections just to make sure that you get all the required elements. Obviously, if you use the fi360 default template, you don't have to worry about that. But many people may want to create their own custom one, so it's just important to note. If you want to see what's in there now, you could just click the little info next to the system report, and it's going to show you the sections contained. So let's go ahead and actually take a look at this. I'll actually open up the 4AP2 one first. And this example is 60 pages, but only because we have multiple examples in here, so don't get too worried. There's 4 different examples here, one with revenue share offsets, one with no revenue share, one with multiple parties, and one with multiple parties and a balance directed back to the plan. So just to show some kind of common examples of different variations based on the type of provider you are, Do you have other affiliates in this report? Is it revenue sharing? Let's just take a look at one of them. And we're going to use the complex one just because it has most amount of information. Except let me show you the fee schedule appendix since I just clicked through it. So if you do build and use a fee schedule, you'll get an appendix in your report for any fee schedule that's utilized. And you can see here it's going to define how the fee schedule is built, what's the minimum, maximum fee, what are your fee schedule ranges. The one highlighted in yellow is actually going to be the tier that was applied based on your particular client situation. So, and this is another advisory fee schedule. This is different from the one that I built. But what you're going to see here is this client has 3.3 million in assets. So it falls into this 3 to 4 million range. If you charge 6 basis points, multiplied by the 3.3 million gives you a quarterly amount of 2,000 and an annual amount of 8,000. So what you would see on your 4B2 disclosure is going to be this number right here. But this appendix gives you a great feel for how that actually was calculated, and is especially helpful too if you pick the tiered option, because you'll have multiple rows highlighted in yellow telling you that multiple rows were summed together to get your total amount for the plan. Okay, let's take a look at I'm actually going to look at the last one. Okay, so this is our typical cover page. Nothing really exciting about that. The first page of the 4B2 fee disclosure gives a little background on the regulation, kind of a little table of contents, and then we'll show essentially this green summary section for each service provider type that you say to include in your 4B2 disclosure. So again, this example, we have a TPA and an advisor that are affiliated, and we have a custodian that's serving as a subcontractor for the TPA. So all three of those need to be included in this report. So what you see is a brief description of the service provider, and this is whatever you type into the interface as a description for that service provider type. For any advisory or any RIA, it'll display your legal registration either as under the Advisors Act of 40 or under state code. It's going to include the services that you're providing, and these are again based on the services you attach to each compensation that you're charging for. So for this example, under the RIA, we're performing the following fiduciary services and the following non-fiduciary services. If we scroll to the second page, now we're going to get into actual compensation. So you're going to see groupings based on a number of different items. This could be real simple and have one section, like some of the basic advisory examples do, or it could be pretty complicated like the one that we're looking at. So what you'll see here, the first one here is direct compensation from company. So you'll see who's the payer, company assets in this case, who's the payee. In this case, it's MDC TPA for the TPA services that it's performing. You'll see kind of the net or summed amounts, and that covers these 4 fees. So an annual admin fee, and this is how it's defined, $1,500, and then here's a description that you put in the system defining that compensation. And it's going to simply group together any fee you define as being paid by company assets. It'll then give you a subtotal for that. Same thing for plan participants. Any fees paid by the plan will be indicated in the same way. Any compensation paid between related parties. Again, here we have the TPA paying the custodian. So that's going to be identified. We have revenue sharing too. So in this case, the TPA is receiving all of the revenue sharing, 12B1 sales, sub-TA, and shareholder service. So at this point, we're simply stating it is receiving this compensation. We'll see in a second what it's doing with it. Is it actually keeping it, or is it using it to offset or rebate back to the plan? Then we get to termination or other one-time as incurred fees. So here we can see the two termination expenses, one for the RIA and one for the TPA. This could include other one-time fees like loans administration or brokerage account window fee or something like that. Again, any other fees that are not typical ongoing fees you would list in here. And again, that's done by the interface. All you have to say is when you're defining a compensation for the assessed, you just want to pick one time. You then get to summary. So what this is going to do is summarize all of the expenses we just looked at and show you two different kind of ways of viewing at it. The top section shows you compensation grouped by the entity receiving the compensation. So you can see here we have our three entities, right? Our custodian, our RIA, and our TPA. And you can see based on these potential sources where they're receiving the revenue. So the custodian's getting $2,000 directly from related parties. The RIA is getting direct compensation from the plan participants, and the TPA has a bunch of stuff going on. It's getting some fees from the company. It has $10,000 in revenue sharing, and since we selected in the interface, we're actually going to offset our fees based on revenue sharing. So we're going to go ahead and offset $9,225 because that was our total fee that we charged. So we're actually offsetting all of it, and all of our fees essentially are being paid by the revenue sharing. We're then receiving $3,000 from participants. There's actually leftover amounts from the $10,000 to also offset some of the plan participant fees. So this is revenue sharing that would actually go back to the plan or the plan participant, and this is $828, the difference between $1053 and $9,225. Lastly, here we can see the TPA paying the custodian $2049, so that shows as an outflow, and you can see the net fees for each entity. The second section has a lot of the same data points, but it's just structured differently to show you by who's paying the compensation. So if you look at the top chart, it's kind of hard to tell, okay, how much of the plan participants actually paying. So what you can see here is the company paid $9,225. It got $9,225 back, essentially, by the revenue sharing offsets. So they actually don't directly have to pay anything. That's why you see $0. The plan participants' direct compensation was $78.41. Only $828 of that was offset, so the plan still actually, there will be a deduction of $7,000. The third source in this case is the indirect revenue sharing, and that's that 10053. So again, you see that listed here at the bottom. So this 17 is still the same total, but it's hopefully showing you in a different way that makes it a little more clear on kind of the actual source of the money. We are still editing these reports as we speak, and probably will be up through Thursday. So, as you look at these, we encourage you to please give us any feedback that you have, anything that's not clear, anything that you want to make sure we're accounting for, or that you think we might want to change or relabel to make more clear. Please pass that on, and we'll do everything we can to take that into account before the initial release. And then, like everything else, we'll, I'm sure, have updates and additions to this as the weeks and months go by. The last part of the disclosure is the services appendix. So this is going to show you a description of the services being performed by each entity. So again, you'll see the fiduciary and non-fiduciary services for the RIA along with the description of what they are. This operational fee summary, if you use the old fee and expense report, this is pretty much the same section. It's just a little bit restructured. There's a shareholder service column. We show dollars and bips in here now. And if you scroll to the bottom, you're going to see totals. So you can see the total operational fees. So let's say here the sales fee was $37.64. You'll see the compensation was received by the TPA. You can see they used it to offset their fees. That compensation structure, remember, that's that little drop down on the right side of the operational fees page. Shareholder fee detail, this is basically what's on the site today. So you can see any of the lowest redemption fees, finder's fees that will be charged. And then again, you have the same compensation received by and compensation structure stated at the bottom so that you're clear on where those fees would be going. And then it just gets into our standard disclosure and glossary. We only have a minute left here. The only other thing I want to quickly show you, and this is still more in development than the 4AP2 piece, but just to at least show you an example here. And if you'd like a copy of this, I'll be happy to send it directly to you. And just email me directly, dave@fi360.com, if you'd like to get a copy of this. But this is the 404A5, or at least the current status of the 404A5 participant disclosure. And it looks similar to the 4AP2. We tried to make it a little bit more clear since it's going to be given to the plan participant. So we changed some stuff around. Font size is bigger. Some of the details are suppressed. But here, basically, you're showing all of the direct and indirect expenses paid by the plan participants. So here you see the direct expenses paid and the indirect expenses paid through revenue sharing. You see any one-time fees like a self-directed brokerage account window or anything else that the plan participant may have to pay themselves or out of their account if they do that. So loan might be another one that would be listed underneath it here. And here is a plan options, performance and expenses. So one of the other requirements under 404A is to have a description of the investment options along with the 1, 5, and 10-year performance, comparison to median and benchmark, description of the annual investment expense ratio, and any shareholder fees that may be assessed. So what you're going to see here is for each fund, which you can see kind of the colors distinguish every other fund as we scroll through this here. But you can see all the data shown. And again, we tried to take all the data we typically show in our client reports and our fund reports you get out of the Toolkit and just show it in a little different way that hopefully was more clear for the average participant reading it. So this is the current status of this report. Again, please, if you have feedback, pass that along. But we're about out of time. I hope this was helpful. I hope it gave you kind of a feel for what we're going to have and made you a little bit more comfortable on types of things that are going to be in there. If you do have any questions, again, please direct them to tools@fi360.com. If there were any questions submitted via the GoToMeeting panel, I'll go ahead and address those now. But for anyone that wants to hang up, this kind of ends the call for today. And thank you very much for joining us. And we'll talk to you later. Again, I will answer these questions, though. So thank you. Okay. So let's see, what are the questions we have here that I can address right now? There's a question here about what may cause a discrepancy between the effective manager fee and the stated manager fee. So the effective management fee, if we go back to the 4AP2 disclosure, which I may have closed here. Sorry, bear with me for 1 second. I'm going to open this report back up. It'll be easier to show you. So while that report's opening, let me see if there's another one in here I can address first. Okay. So the effective management fee is calculated by essentially taking the the prospectus net expense ratio stated and subtracting the shareholder service, sub-TA, and 12B1 fee. So the only time where we're seeing this get a little tricky is when you have dollar per participant, sub-TA or shareholder servicing fees in particular, and based on how many participants you have, that may kind of make the effective management fee more off from what might be stated in the prospectus. And again, I think that's just it's a matter of the calculation, and if they're actually charging per participant and there's 1,000 participants, it's likely to increase that value more than what would normally be the case. So there's not really I guess a direct answer to the question other than that's how it's calculated, and if that, based on the plan situation, it may cause a slight discrepancy or a difference, but that's how we're doing it. The question here on a particular fee where they actually charge an hourly fee and then provide them an estimate on annually, but billed quarterly. So it's kind of a complex example there, but let me actually go ahead and take a look at the compensation page. And I haven't really thought about this to date, so let's see if I can figure this out while we're actually defining one. So if we were going to create a new compensation, and let's just call it hourly fee for right now. That would obviously be the name of the fee that you're charging. But what you're likely to do is put in assessed as flat fee, and what you're likely to do again here is either put, if you want to put the estimated annual compensation, you're going to need to put at least choose yearly or quarterly. In your example, I would probably pick quarterly, and I'd probably say $1,000 because that's going to sum to $4,000 annually. And in the description, you probably want to write that this fee is an estimate based on an hourly fee of so much. With historically this has been 62 hours, so that we estimate the annual fee to be approximately $4,000. But paid quarterly would be $1,000. So I think the combination of like the frequency, the value, and the description would allow you to communicate that. Any other questions to address while you got me on the phone? Okay. Well, thanks again, and again, as always, contact us if you need us. tools@fi360.com. But have a great day. We look very much forward to getting this functionality out for everyone to use, and hopefully we're not talking to you Friday morning. But have a nice afternoon. Thank you.